There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi everyone, today we're going to talk about cycles. We're going to talk about, in particular, the market participant cycle, which is a major cycle in the stock market that gives you vital information as to where dark pools are accumulating or rotating or distributing, where smaller funds are, where retail crowd people are, where the professionals are in the general trend of the stock market or a particular stock. The market participant cycle is a very important cycle. It sets the stage for market conditions. There are 6 major market conditions. It's not just an uptrend or a downtrending market or a bull market or a bear market or a speculative market. There are 6 distinct, very different market conditions. Who is in control of price dictates which market participant group or groups are creating that current market condition. And when you know this information, it is extremely helpful in every other thing that you do. There are a lot of you who follow the Dow cycle theories. There are a lot of you who follow the Elliott wave theories. And these are fine, but these are just a surface view of what you need to know. You see the technical patterns, the 3-wave pattern of Elliott wave, or the 535 Elliott wave, or the downtrending WXYZ, or whatever. Because you're studying Elliott wave, you see the different wave patterns, but what you don't have knowledge of, and what is vitally important, is the market participants who have created that particular Elliott wave. This takes your Elliott wave or Dow cycle theory or any cycle theories that you use to a whole new level of understanding and expertise. The more you know and understand about what the price is doing and why it is doing it, the easier it will be to anticipate the next near-term price action. This can help you avoid whipsaw trades. This can help you avoid option trades that end up in a disastrous loss. This can help you with all kinds of things because it helps you understand what group is controlling price at that time to create that particular wave or trend pattern. This is important for sector and industry people who want to use sectors or industries to trade the market. Because by understanding the different wave patterns, the different action of the market participant cycle, you have a great understanding of who is building that trend. And it matters. If you continually chase the retail crowd, you're getting in late, you're getting in speculatively, and you will lose a lot of money because the retail crowd has almost no education. It doesn't matter how many articles you read on the internet. It doesn't matter how many webinars you attend. It doesn't matter how many seminars you go to in a hotel on the weekend. These are not enough. If you don't understand market participant cycle, which is the most important cycle to know about, and the market condition analysis, you don't have a complete education. Most of you learn very surface or very simple, very basic information, and you think that's all you need to know. And then when you get into trouble, you can't understand why. Why didn't that wave work? Why did that wave go longer? Why did that candlestick pattern fail? Why am I getting whipsawed out? And sometimes you seek very simple explanations or you want to throw blame on somebody like the market makers. Well, let me tell you, there are no more human market makers. And there never really were, who sat around all day knocking off 100 share lot or 500 share lot retail traders. It didn't happen. What happens when you have a whipsaw trade, or when the trade goes against you, is that you're not understanding which side of the trade the large lots or those who are controlling price are on. A market can go down in a day, but that doesn't mean that everybody is selling. I laugh every time I get up in the morning at 3 o'clock and I look at the articles that are on the internet for the retail crowd, and it says, investors are buying this because, investors are doing this because, the market went up because investors believe in this. It's all folly. There is no one group. There's no two groups. There are 9 distinct market participant groups. Each one has a different agenda. Each one has a different size of capital base or financial resources to invest. Some are long-term, some are short-term, some are both. Some are trading multi-venues, multi-financial markets. Some are only trading one. Some are using 100 share lots. Some are typically buying 100,000 to 1 million share lots. Some are using trading exchanges. Some are only executing on retail brokers, and some of them are in dark pools. And that's just the tip of the iceberg of what you need to understand. Speed of execution, venues, order types. Where are they in the trend? Why are they buying a certain type of stock at a certain time? Why are they using options? Why are they using futures? What derivatives are they trading? You need to understand this information, because if you do, trading is going to get a whole lot easier. It's only a handful of companies that makes the Dow move up. Some days it's only 1 or 2 stocks that make the Dow move up, and the rest are not doing much of anything. This is a very scary market because we don't have all of the stocks moving up and growing and having a huge, strong market. We have a very narrow, speculative market created by manipulators who are using legitimate streams of information to get you, the retail trader or retail investor, to buy certain stocks so they can sell them for a profit. When not enough of you show up to buy when they are trying to sell, then the market has a down day. The problem is, sooner or later, there are going to be a whole lot more large lot sellers than there are buyers, and suddenly the market's going to go down a huge amount. If you're buying stocks that are this narrow group that's speculative and you're hoping to hold them for long term, you're going to lose a lot of money. It may not be tomorrow, it may not be next week, but you're buying into speculation and you're paying extremely high prices for a stock that are beyond the fundamental values and rapidly approaching beyond technical values. Now, there's 2 sides of the market. Some of the market participant groups use fundamentals on financial analysis. Some groups use technical analysis. Some groups use relational technical analysis, which is what I teach. And they use both technical, fundamental, and risk analysis. And these are the strongest traders because they understand the whole of the market. The market participant group cycle is part of relational analysis. It's part of market condition analysis. It's part of what tells you what's going on in the market rather than you guessing, or rather than you thinking that all the investors are buying Boeing. No, they're not. It's just a small group. And because they're buying speculatively with the wrong order types on retail venues or exchanges, they're buying at an extremely high price, and that stock will move down, and it will move down faster than it moved up vertically. What goes up vertically goes down vertically, but it goes down at an accelerated pace because as a stock sells, nobody wants to buy it when it's going down very fast. People panic and they realize that they need to sell the stock because they're losing money. So then more people sell and more people sell and more people sell. And the only thing that stops it are 2 groups who sell short and your retail broker who sells short. So while it's going down, they're selling short, making money on the downside, and you're losing money. And then when they figure that they've made enough money on their sell shorts, which is legal, it makes the market, then they'll buy to cover at a very low price, and you will take a huge loss. So you can wait for the huge loss, or you can come and visit our site. and check out our market participant cycle. We have a page on that explaining what it is. We also have a page on market condition analysis and what that is, and explains what's going on so that you have a better understanding. One thing you should ask any company that you buy a course or invest in a course or go to a seminar is, when was that course created? Because if it's created in the 1990s, oh, we created that course 20 years ago and it's just great. It is not. The market has changed in the past 20 years in an amazing amount. There's been this massive evolution. There are more market participant groups. There are dark pools that didn't exist 20 years ago. There are HFTs, and they didn't exist 20 years ago. Multi-level, high-speed order systems were not available in the 90s or early 2000s. So if someone is selling you a course that they are proudly telling you has been around for 20 years, it is outdated. I go onto the internet all the time and I just roll my eyes, because everywhere I go, here's this obsolete, outdated strategies and all these things that don't work anymore because the market participant cycle has changed. There's more groups, market conditions have changed, and the whole of the internal market structure has been completely and utterly changed. I still hear people tell their students that market makers are what cause whipsaw trades. And I have to laugh, because that hasn't happened in eons, if it ever actually really did happen. I know many market makers, and I used to tell them that story in the 90s, and they would just howl, laugh, and they'd say, oh, the retail crowd, they're so naive. And they'd look at me and they'd say, we don't have time to mess around with a small 100-lot order. We're not sitting there all day trying to whipsaw retail traders out of a trade or take their stops out. We don't have time. We're going after the big lots because that's where the money is. And that's the truth that nobody wants you to know. The market is fully automated. And so if you have trouble with the market, it's because you don't understand how it works. Your retail broker fills almost all of your orders, unless you're ordering something very unique or special, something he doesn't have in inventory. So you're trading with your retail broker. You're not trading with the rest of the market. However, the rest of the market can see your orders because your retail broker must light his orders to the exchanges before he fills them. All of them must follow this, or they get slapped with a big fine from the SEC. So the HFTs can see and front-run your orders, and they do it all the time. Now, HFTs are not humans. They're computers. They're very sophisticated algorithms with high-powered, multi-second speed computer systems that your computer system can't even begin to match. Even if you sign up for a platform or a trading system and they give you this trading system, it is still a retail trading system on the minute scale. They can trade 60,000 times in 1 minute. You can trade once. Your retail broker fills your orders. So don't you think you need to understand all this stuff so that you can understand how to avoid being front-run, how you can avoid being taken advantage of by your own broker, and how you can understand where to find the best stocks that have the lowest risk with the highest profit potential. You can't get this stuff from the internet because it isn't out there. Most of the market doesn't want you to know all the facts and all the information you need to know to be successful. The mutual funds don't want you to know anything because they want you to buy their mutual funds. The pension funds don't allow you any information or any variables because they want to manage and make money for their pension fund from your retirement account. Your retail broker doesn't want you to know much because they want to tell you what stocks to trade so they can make money. They are selling out of their inventory. So their recommendations are always to their benefit. The retail websites are promoting whatever their advertisers tell them to promote because they are trying to please their advertisers who supply the revenues to them so they can keep their website open for you. You have to realize that the market is out there and everybody that's on the professional side that's selling you something wants to make money for themselves. They're not out there to do kindness to help you become financially secure or successful. TechniTrader is. Howard and I started this company in our retirement because we felt that we could offer something to the retail crowd that wasn't out there. I thought everybody knew this when we first started doing our workshops, because it seemed to me that everybody should know this stuff. I grew up with it. But I discovered that most people have no idea what a market condition is. They have no idea what the market participant groups are. They have no idea what relational technical analysis is. They simply see a candlestick that they're taught and they think they should buy because that candlestick forms. They don't know who formed that candlestick. They don't know whether it was a large lot or a small lot. They don't know what's going to happen the next day. They're not using the right indicators. And so they may make money in a speculative market, but when the market turns, when the market is over-speculated and we need to have a correction. Now there are two correction types. The stock market can go down into an intermediate term or bear market, or it can shift sideways into a trading range. We also have companies who continually report fabulous earnings, but their revenues are flat or slowly declining or up and down each quarter. You never check the quarterly reports. You only check the annual reports. So you don't know this because nobody told you you need to check the quarterly reports as well. This is the kind of thing that we teach at TechniTrader. So come and visit our website and come and check out our pages, because what I want to show you is very important. You will be amazed at what you don't know. And this information is vital because it will make a huge difference to your financial success, your financial security, and the future of your family for generations to come. Now, wouldn't it be nice to know that you are passing along something that each generation will have? Our courses aren't something that you just pay a certain fee for and hope that you make some money on. Our courses provide a lifetime of education that you need. They change people's lives. You want to take risk? Take calculated risk. You want to have opportunities to have a new home or a boat or a car or whatever, retire early. This is what we help you achieve. You need to come visit our website and check us out because we have a lot of information that you can find nowhere else on the internet, in websites, in books, or anywhere. Because most of the books, most of the websites, and most of the internet is intending to not give you the information you need because they want to sell you something. We are only an educational company. That's all we do is educate. And as such, we have a completely different perspective. We want to give you as much information and education and training as you can possibly get and have to use so that you become financially successful, because your success in the market is our success. Our format is completely unique and different than everyone else's, and we carefully help each student customize and tailor their trading or investing to how they want to approach the market, with their risk tolerance, with their capital base, and so on. It's a very unique experience, and it's very hard to explain until you've been through it. But once you've been through it, you're going to wonder why on earth you waited so long. Why you didn't jump in right away and do this, because you would already be making money and you would already be very financially secure and you would know what to do and when to do it when the correction comes. A correction will come. It's not a matter of if, it's a matter of when. I think everybody wants to learn about the market, but they just don't know where to go. I think everybody wants to be financially secure. We're becoming an investing-based economy. And if you don't learn this stuff, you and your family will be left behind, and you will find yourself in the lower middle class rather than the upper middle class. So take some time, come check us out. We're very low key. And feel comfortable to give us a call and ask us questions, because there's a lot of information that you can get by speaking to one of our curriculum advisors. You are going to have to put some time into your education. You are going to have to study the courses as we teach, and then you're going to have to practice. But then, for however long you live, you will have this education. And once you have become a student, you can always come back and ask us a question about any course that you have taken, and we will answer that question. So, come and visit us. I'm Martha Stokes, and that's our radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.